Hey, financial freedom seekers, Simon Dixon here. In yesterday's video, I covered 3 red flags, and today I want to go a bit deeper into one that concerns me, and I'll try and go a bit deeper as well in why it concerns me. So in 2023, I talked about those 3 red flags. One of them was Binance, the other was Tether, the other was a digital currency group that we need to look out for. And I talked about the different types of risks and how to adjust to it accordingly. Today I want to talk about a few initiatives that I've seen around Digital Currency Group. So a bit of background, Digital Currency Group is one of the largest supporters and investors of Bitcoin companies in our industry. It was headed up by Barry Silbert, somebody that I have respect for and met over the years. Never face to face, but actually in the really early days before he started Digital Currency Group, we reached out to him because he created a company called Second Market, which was a precursor to Bank to the Future. We specialize in Bitcoin companies and allow people to purchase shares in Bitcoin companies. But that was a precursor where you could buy pre-IPO before the companies go public. And it was later sold to NASDAQ private markets, I believe, where you could buy shares in companies that were about to go public. And so the Second Market was my first introduction to Barry Silbert, and that was pre-Bitcoin when I was focused on financial innovation in the peer-to-peer lending market. And then obviously peer-to-peer currency, digital cash was created with Bitcoin. But anyway, he's been a big supporter of investing in many of the companies, and many of the companies I've invested in over 100 different private equity deals in the Bitcoin and crypto space over the last decade or so. And at Bank to the Future, many of them were co-investors in many of the deals. So let's precursor it with that. Now, Digital Currency Group is a holding company that holds lots and lots of shares in lots and lots of different companies, and also owns several different, different types of interests as well as a wholly owned subsidiary. You have things like Genesis, which is a peer-to-peer, well, not a peer-to-peer, it's meant to be. It is a lending market where you can receive yield on your crypto. More recently, I started calling the red flags when I discovered that Celsius was diversifying across a range of different investments, making it an illegal security rather than a peer-to-peer lending company. Therefore regulate, later, well, actually before that, way before that, regulators started investigating and making cease and desist orders to Celsius for selling unregistered securities, because essentially it's like a fund. So Genesis is in a similar situation where it is a security, and it gives you yield by depositing your coins. And recently it went into Chapter 11. Well, it's not gone into Chapter 11 protection. It paused withdrawals, and people were expecting, including me, for it to go into Chapter 11. It's a wholly owned subsidiary of Digital Currency Group. You were expecting it to protect itself, but it's trying to negotiate a restructuring. It was deeply exposed to several trades. One of those was its relationship with FTX, the fraudulent cryptocurrency exchange that went down. And also companies like BlockFi had exposure, and these are all integrated in the contagion. But it was making a very controversial way of generating yield that many of the other companies were using as well, which is that it was taking advantage of an arbitrage opportunity in another product that's fully owned by Digital Currency Group called the Grayscale Bitcoin Investment Trust. The ticker symbol is GBTC. Sorry if that's a bunch of jargon. Let me break down some of the jargon for you. Wholly owned subsidiary just simply means a company owned by another company. So, a Digital Currency Group owns the company Grayscale, and Grayscale offers financial products. What types of financial products? Well, it allows institutional investors, that is, pension funds, accredited investors, and also retail, by filing the ability for it to be offered to retail, exposure to Bitcoin, i.e. you can get within your retirement fund the ability to track the Bitcoin price or have exposure to Bitcoin, because it's very hard to find someone that will allow you to buy Bitcoin direct, because it was designed for you to self-custody, which means that with Bitcoin you can hold it where you own the key. It's much like owning a piece of physical cash or gold. And because it allows people to own their own money, institutions find it quite tricky, and so that you need a way of getting exposure to Bitcoin via another company that can hold it in custody for you. And so the very early company that did that was Grayscale. They created the Grayscale Bitcoin Investment Trust. A simple concept. Essentially, you would get shares in a company, and that company would own Bitcoin. And so as more shares are issued, more Bitcoin would be owned. Approximately over 600,000 Bitcoin, I think at the moment, maybe more, is owned by the Grayscale Bitcoin Investment Trust. This is many investors that look to get exposure to Bitcoin through, some kind of mechanism that was easier without them having to take self-custody. The challenge with that is the price of those shares could trade at either a premium or discount to Bitcoin itself. So at the moment, Bitcoin's about $16,500, but you could buy, for example, exposure to Bitcoin at the equivalent of, let's say, $18,000. People were willing to pay a premium in order to hold Bitcoin in their retirement funds or their trust, or through this mechanism where they don't have to self-custody and somebody else can take care of the security for them. More recently, there's been big concerns around the future of the market and companies in this market. So people were not willing to pay a premium. In fact, they were willing to sell their shares at a discount due to concerns around the market. Maybe they were never Bitcoin thinkers. You can imagine anyone that buys Bitcoin through such a structure is probably not necessarily a hardcore Bitcoiner that holds things in self-custody, or they were doing it as part of their retirement plans or whatever it may be. There's various different reasons why you would do that. Some people diversify between custody and self-custody. Just in case you lose your self-custody coin, so you have some in custody, or you can use it as part of an inheritance plan where you can pass it on intergenerational. There's reasons to do it. Anyway, excuse me. And so when it trades at a discount, you would hope that the market would buy it back, pushing up the price until it trades close to the price of Bitcoin. The problem is that the way the product is structured, and I don't want to go deep into it, it doesn't react to the price, and it more reacts to concerns around the company, and it's not as good as another type of product, which is called an exchange traded fund. These are the index tracking funds. For example, if you want to buy, exposure to the S&P 500, then you buy, an S&P 500 index tracker or ETF, exchange traded fund, and it tracks the price very closely. It's very efficient. The problem is that the regulators failed. The SEC would not approve any of these, despite the fact that companies like the Winklevoss twins were the very first I heard of, I think way back in 2013. And for about 7, almost 9 years now, the industry has been trying to get a Bitcoin ETF approved. They would only approve one when it was backed by derivatives. Sorry for getting complicated. I'll get back to why it is right now. So they have, derivatives players like the CME and established companies in crypto. They didn't want exposure, direct exposure to the market manipulation of Bitcoin, which is a very silly reason, because futures, derivatives, where you get exposure to the future price of Bitcoin, is just as manipulated and just as problematic, and derives its price from Bitcoin anyway. So it was a completely ridiculous argument, but they gave the industry to their buddies that they're comfortable with, rather than companies like Gemini run by the Winklevoss twins that were applying for an ETF, and many others. And even very reputable ETF providers did it. But for political reasons, I believe the SEC never approved one, which caused a ginormous problem in our industry that everybody was using, the Grayscale Bitcoin Investment Trust. I'll now call it GBTC, which is its ticker symbol. So GBTC always had these big premiums and discounts, and it was one of the only ways to get US dollar, US regulated exposure to Bitcoin without self-custodying or going through a cryptocurrency exchange. So it became very popular. All of the funds are custodied at Coinbase custody. And anyway, many of the hedge funds and the lending platforms, like 3 Arrows Capital and BlockFi and Celsius and others, were using this opportunity to create what's called an arbitrage trade. An arbitrage is where one price of Bitcoin in one market is different to another price of Bitcoin in another market. And that could be any market, but in this case, Bitcoin. And therefore you could buy Bitcoin a lot cheaper and sell it more expensively in the time that it takes you to get from one exchange to the other. A little bit of trivia on the side, this is why stablecoins were created, in order to support arbitrage to make more efficient pricing between the different cryptocurrency exchanges. But the GBTC was vastly inefficient. In fact, if you look at it today, it trades at approximately 50% discount to just buying Bitcoin where you can self-custody it or on a cryptocurrency exchange. So now a bunch of people, because of fear in the market, what happened is the trade reversed and didn't work. It would take approximately 6 months to try and execute such an arbitrage trade. So you had to take 6 months of risk. And hedge funds like 3 Arrows Capital and BlockFi went really big on this. Now, 3 Arrows Capital was actually set up as a hedge fund, so it wasn't illegal in that sense, but it committed lots of other fraud. But BlockFi wasn't even a security, so it wasn't even set up, so it was illegal in the first place, and companies like Celsius as well, to execute such trades in order to generate yield, because they sold it like it was a deposit. In a future video, I'll cover the whole thing around the illegality of owning people's money and the court hearings that are happening in Celsius. But again, let's not deviate. So GBTC started to reverse, the premium wasn't there, and then you had to sell at a discount. And in fear in the market, when the market crashed and tumbled, as the market got more and more fear-driven, people were just willing to get out at a discount. And now this premium has been stuck there and is getting worse and worse and worse. And it may never return. Why? Because we may get a Bitcoin ETF approved, or the demand's not there, and people realize, there's big fear in the market around Digital Currency Group, because one of its subsidiaries and Digital Currency Group were exposed to the hedge fund 3 Arrows Capital, and there was a bunch of very shady shit that is being called out right now. So in Celsius, I had to call out Alex Mashinsky and Celsius for when I discovered the shady shit. In the case of FTX, CZ from Binance had to call it out. And now we're getting Cameron, the Winklevoss twins, who tried to create an ETF that were also in partnership through their company Gemini, did all their yield through Genesis, which was a subsidiary of Digital Currency Group. Now they're calling it out, and I wrote a tweet where I compared it to FTX and many of the different things. I'm not saying it's the same thing as FTX, but the Winklevoss were making many of those parallels in some of the activities, and this may have all been done. So I have some deep concerns. I'll cover that in some other way. This is focused on GBTC. So now we're in a situation where GBTC is about 49% discount to Bitcoin, and all the shareholders in GBTC are fuming, of course, because this may never return. Now, here's the problem. Now Digital Currency Group has a dilemma. Grayscale Bitcoin Investment Trust earns about a 2% fee for all the Bitcoin, so it's printing It's a great business. It's given them like 200 million because of this regulatory arbitrage and inefficiency of the regulators every year. Digital Currency Group is in financial distress because of its subsidiary Genesis, Genesis that was got itself, and then there were all these intercompany loans. I don't want to go too deep into it, where essentially the price was being supported by Digital Currency Group, it appears, using loans that they borrowed from their own subsidiary, which paused withdrawals, which has caused lots of people to lose a lot of money, and they haven't entered Chapter 11 to give us all the transparency at this stage yet. The creditors have been putting together plans, and Barry Silbert and Digital Currency Group has not executed anything or communicated anything that makes the creditors happy yet. So there are lots of initiatives happening right now. If you are a shareholder in GBTC, one of my good friends that I've known for many, many years, David Bailey, has put together an initiative called redeembtc.com. And this is trying to get greater than 50% of the shareholders of GBTC so that then they can collectively pool their shareholding together in order to do what's right for shareholders and not what's right for Digital Currency Group to manage this conflict that now exists. Because Digital Currency Group is earning loads of money here and has financial distress here, but has not got a fiduciary duty to act in the best interest of GBTC shareholders because of the way that the Bitcoin Investment Trust is set up. They've just got a duty to hold the Bitcoin. And so this causes a big problem. They've made big losses, it appears, as a result of trying to support the price. And now Digital Currency Group is one of the largest shareholders in its subsidiary, Grayscale, Bitcoin, GBTC, and you have these major conflicts where you can't simultaneously meet all of your duties. So shareholders are all getting together. They have several suggestions. They said you can improve the price by reducing the extortionate 2% fee, which made sense at the time, but now there's much more competitive markets. Like other countries have approved Bitcoin ETFs. So if you're using another base currency like Australian dollar or Canadian dollar, then you can get exposure and the price is significantly cheaper. You know, with an ETF, you'd only expect about 0.5% fee at maximum for these efficient ETFs as well. So they're significantly cheaper. So they could, takeover bids have now been put in saying, we'll take over GBTC and we'll charge only 75 basis points rather than 2%. Which could improve the price and make it more competitive with others. Others have come along and said, we'll take over the whole thing. Others have said, we want initiatives to unwind the whole thing and allow people to redeem to get their underlying Bitcoin, because all the Bitcoin's there in Coinbase custody. And so there's many initiatives to redeem, hence the website redeem, redeemgbtc.com. So if you are a shareholder, I recommend. It's run by David Bailey. They're pooling together initiatives, doing public town spaces on Twitter. I've known he's been involved in Bitcoin since right in the early days, did all the much of the early adoption of Bitcoin in China. I know him back from my days when I lived in Hong Kong and China. Is part of its business of Bitcoin Magazine, which runs like the biggest annual conference for Bitcoin and Bitcoin 2023 and various other things. Someone I've known in the industry for a long time. And so there's great initiatives to take over GBTC, because what's right for the shareholders of GBTC might not be right for the shareholders of Digital Currency Group. There's a classic conflict of interest, and they need support from shareholders to try and get that happening. So this is one of the interesting initiatives where financial innovation could be used in order to fix a big problem with that 50% discount, and hopefully regulators in the future will approve the ETF, learn their lessons. There's been many regulatory failures in their hostility towards Bitcoin that have caused many problems, and a big part of all the cascading effect that has happened in the market. So This is a quick, not a quick summary, never it is with me. I like to just cover the history so you got the details on the GBTC takeover and the issues with Digital Currency Group. And I'll be looking very closely at this and covering more content on the red flag of Digital Currency Group and what it means for our industry. Remember also to watch previous videos. I talked about the difference between spending, saving, investing, and the only reasons you might have some of your money in such a bucket is because you're putting all your money in Bitcoin through the investment bucket, which may use such a product, but never to mix that with your saving, which is Bitcoin in cold storage, for hard money saving using Bitcoin. Very, very important to get that right. Very few get it right. So I created a video recently on that and the 4 different buckets and how to make 2023 the best financial year for you, and various other videos that I've been releasing every day. Okay, so always remember you're alive at one of the most interesting and exciting times in financial history. Some are going to get really hurt, others are going to do really well. Like this video if you think that this is helping you in doing better during this financial turmoil, because YouTube will only show this to more people if you like it. So please do me that favor. I'll keep creating this content if you keep liking. And if you're not a subscriber and you're new to this, subscribe to this channel. I create a video every day for you to hold me accountable to work out. And as a reward, I give you some financial knowledge on the things that I'm doing in navigating this transition to the future of finance. So I'll see you in the next video. We're doing it with peace, we're doing it with love, we're doing it with unity. And I'll see you in tomorrow. Leave a comment below and let me know what you would like to see in future videos. I'll see you tomorrow. Peace.